For a closer look at the car company, let's bring in auto industry analyst Rebecca Lindland, Director of Strategic Review at IHS Automotive. She joins us from Boston. Rebecca, welcome back to Bottom Line. Always a pleasure to have you on.
Thanks for having me on, Mark.
Rebecca, you just heard Alan Mullally telling our Tom Keene on Surveillance Midday that people want smaller cars. Is he right?
He is right to some extent. One of the concerns we do have when we look at Ford's future product lineup is they really have emphasized small cars. And when we look at the data overall, small cars are actually a small part of the U.S. market still. Consumers are still buying crossovers in higher numbers. Every 1 in 4 vehicles sold is a crossover today.
Well, as our Sue Keenan just told us, Ford twice raised prices on its new and more fuel-efficient models. Is that an interesting strategy given the economic climate that we see ourselves in?
You know, we've actually seen other manufacturers, including Toyota and GM, raise prices as well, typically by about $100 to $130. So it's not an exorbitant amount, and Ford isn't the only one doing it. We do have an issue with higher commodity prices, and the manufacturers have to deal with that in some way.
Well, speaking of the higher commodity prices, how's the high price of gasoline going to affect Ford going forward? Right now, consumers are really getting pinched at the pump.
They are, and we've seen historically in 2008 when gas prices spiked up, that consumers will buy a more fuel-efficient vehicle for about 3 to 4 months, and then they'll gradually start creeping up to larger vehicles again. The difference between 2008 and 2011, though, is there's a lot more fuel-efficient vehicles on the road. As was referenced in the package before, every vehicle, the Explorer gets better fuel economy, the Jeep Grand Cherokee gets better fuel economy, so everybody's getting better fuel economy than the previous version.
Rebecca, how was Ford able to be profitable around the globe?
You know, that's an impressive statistic. It's one of the things I looked for right away, and it really sticks out because, of course, GM is continuing to have issues in Europe. But when we look at where Ford is profitable, you know, one of the things I have concerns about is that they're a very small player in China still. They're only about 350,000 units last year, whereas GM was at 1.1 million. So they are profitable, but they are smaller in other places too. But that's okay for right now. But I do want to see them grow more in China.
Rebecca, maybe one down spot, I guess you could call it here. Ford saying that its quality performance in the first quarter was, quote, mixed, falling short of a goal to improve. How do they turn that aspect around?
It's really about the details. When we look at quality and we look at manufacturers that make improvements, one of the things that we want them to do is test vehicles for more miles before they bring them out to launch. Chrysler has taken this strategy where they're testing them for almost 3 times as many miles, minimal cost, because they maximize on the warranty then. So there's benefits to maybe paying attention to some of those details when it comes to improving quality.
Rebecca, in our last 15 seconds, does this bode well for the U.S. auto industry, considering where it was just a couple of years ago?
I hope so. You know, even my own family has skepticism when it comes to the auto industry, but I think that we do need to recognize that they are making improvements.
All right, Rebecca Lindland, IHS Automotive, joining us from Boston. Always a pleasure to have you on. Thanks.
Thanks so much, Mark.